gold demand in India saw a 5% year-on-year increase in 2024, reaching 800 tons, as per the World Gold Council's report released on Wednesday. The growth is driven by reduced import duties as well as strong purchasing activity related to weddings and festivals. Gold prices continued their upward trend for the fifth consecutive session, rising by 500 rupees to a new high of 85,800 rupees per 10 grams in Delhi. This is driven by steady demand from jewelers and retailers. Meanwhile, the Indian rupee has hit a record low on Wednesday, falling sharply in the afternoon as bearish market sentiment took hold and traders anticipated a possible rate cut in this week's RBI's Monetary Policy Committee. The rupee dipped to 87 rupees 48 paisa against the US dollar before closing at 87 rupees 46 paisa, marking a 0.4% decline in the day. Now, the currency has dropped over 2% in this calendar year alone. Remember, we are just in the first week of February, and in this year, which is just the 31 days of Jan and about 5 days of February, the currency has dropped about 2%, making it the worst performing major Asian currency. Now, several factors, including persistent foreign outflows, uncertainty surrounding US trade tariffs, and expectations of rate cuts at home, have contributed to the weakness of the rupee. So on the show today, we try and get you answers to these questions. Number one, how will these record high gold prices impact you as a buyer of gold or an investor? Number two, is it a good time to buy gold now and ride the rally, or should you wait for a price correction? Number three, with the sovereign gold bonds now out of order, should you be investing in physical gold, ETFs, or digital gold? What should be your investment strategy? Number four, how does the rupee exchange rate affect gold prices, and how can consumers hedge with the falling rupee and the rising rate of gold? And finally, should you consider selling instead of buying your gold holdings, or is it a better time to hold for long-term gains? Joining me on the show is Kunal Shah, Head Commodities Research, Nirmal Bang. I also have with me Mitali Nikore, Founder and Chief Economist, Nikore Associates. Kunal, let me begin by asking you, what is driving the surge in gold?
More of fear that the US tariff, coupled with the change in economic order, what we are seeing is a rise of Asia as compared to rise of East as compared to the West, and East is the major dominating and driving factor behind gold purchases. So we are seeing all the Eastern central bankers accumulating gold. After the Russia's invasion on Ukraine, when Russia's foreign exchange reserve was freeze, all the central banks are buying gold like there is no tomorrow. All the central banks are diversifying their reserve. So the price is inelastic. It doesn't matter. Every time they want to diversify, they are diversifying their reserve with gold. So this is the key change which has taken place 3 years back, and it continues. Another thing is inflationary expectations are surging up, and that is also leading investors to drive their allocation into gold. One of the most important reasons behind the rally, what we are seeing, is the tariff. So
Okay.
tariffs are not good for the global economy, and tariffs are always inflationary. It leads to the protectionism rather than the globalization, and because of that, a lot of uncertainty will arise in the supply chain. The inflationary expectation will move up, and hence gold is responding to that. So the spread between the London gold and US gold is pretty high. It went up to as high as $45.
Okay.
That is spot gold versus the US gold. But it seems that there is no reason why you should sell gold right now. It's the time to hold on to gold. And even though we've seen a at least 10% return in the year 2025,
Yeah.
we believe that small bouts of correction can take place due to US-China trade talks, some positive outcome out of that and everything. But the trajectory still remains upward. and
Okay.
we continue to remain bullish on gold.
Okay, you continue to remain bullish on gold. The trajectory is upwards, and Kunal Shah there warning our viewers not to sell gold right now, but this may be the time to hold on. Let's bring in economist Mithali Nikore into this conversation. Mithali, good morning. Now, obviously, what we are seeing across the world is pretty much beyond the control of anyone sitting here in India. So, you've got potential tariff wars, you've got foreign investors really hedging on the US dollar, and there's an outflow. And in general, when stock markets are volatile and show a downward trend, the inverse relationship between gold kicks in and gold starts going high. But for India, it becomes a double whammy. We really don't know how to deal with inflation. We really don't know what's going to happen in the RBI MPC decision tomorrow. And whatever else is happening in the world is outside our ambit. So what really is the future from here? And more specifically, what do you expect, the RBI Monetary Policy Committee to do? And will that have a bearing on the Indian rupee and the gold prices?
So I think, Karthik, today you are really embodying the voice of a lot of consumers
Okay,
in all these questions that you're asking, because there is a lot of global uncertainty. And I think the president of the United States, President Trump, is actually thriving on this uncertainty. Because if you see the global markets, not only in India, but global markets are reacting. We are seeing several Asian stocks tumble, and we're seeing, foreign investors scrambling because they are not very sure what is the market where, especially FIIs, what we call as foreign institutional investors, are scrambling because
yeah,
they are not sure which market is going to give them the highest possible return. And in fact, many of them are what we call as flying to safety.
right,
So they are going off back into US securities, US bond markets, even because they're not very sure how the different executive orders that President Trump is signing are going to have, what kind of impact they're going to have.
right,
If you see, even on tariffs, it was a genius move. He went in, he, said, I'm going to impose this 25% tariff on a Mexico, on a Canada. And then literally 2 days later, he has a phone call, strikes a deal. And now the US is at a better position than where it was, but the tariffs still haven't been imposed.
that's right,
So at the end of the day, this is all about creating chaos. And the markets are reacting to that chaos by investing in the one commodity that withstands all chaos, which is gold. And
right,
this is why we're seeing the gold demand is reaching record highs. And of course, in India, there are domestic reasons also, as you said, consumer preferences very strong for gold. But this is also because a lot of banks in India and even the Reserve Bank of India are actually investing in shoring up their gold reserves,
right,
because that helps them and manage the currency.
all right,
Secondly, when it comes to currency management and also like exchange rate management, the RBI has been doing a phenomenal job over the last 2 years to manage the currency. There's a lot of rupee that is being sold in the market by the RBI. So I do expect that the MPC decision will be in line in order to maintain the amount of the currency. But it's not a bad thing for our currency to fall at this stage, because it actually benefits our exports. It makes our exports cheaper and gives us a competitive edge in global markets. It also makes investing cheaper in India. So if we are trying to attract investment and foreign investment, they can buy greater equities and debt shares with a lower rupee. So
right.
it's
I hear you.
actually all in all good for India.
I hear you. Let me bring in Kunal Shah back. Kunal, Mithali is trying to argue the point that that a depreciating rupee is good for exports. I agree with her, but India still has a current account deficit, and I think one of our biggest import products happens to be oil. So a falling rupee is obviously bad for India's imports. So with that in line, with the RBI, I mean, people are hoping that the RBI would cut rates by at least 25 basis points tomorrow. If the RBI does go ahead and do that, what is the impact that's going to have on the Indian rupee and more so on gold?
So Indian rupees, like you say, it's dominated by two factors. One is the external, and another is internal. So rate cut would definitely lead to some strength in the Indian rupee, but we have to see what's happening outside India and to the dollar index and other emerging market currencies. So we are of the view that the dollar index have peaked out at 110, and it is going to gradually decline going forward. And on that view, we believe that there is also possibility that 88 can be the top for the Indian rupee
Okay.
as far as the depreciation part is concerned, and gradually, it should appreciate with the falling dollar. So 3 months down the line, it should be it should have been appreciated then further depreciation. As far as exporter point of view, yes, exporters will want rupee to depreciate, but it's not good from the inflation point of view also. And I believe that we have seen the worst. A bit of a percent or odd another depreciation can come, but
Okay.
not beyond that.
Okay, so the worst could potentially be over, and maybe 88 is the level for the rupee. I want to bring both your views in now on investors who are looking at hedging on the gold, on the yellow metal. What should really their strategy be? Let me start by bringing in Mithali. Mithali, sovereign gold bonds are pretty much history now. I don't think they're coming back in the foreseeable future. So in the absence of sovereign gold bonds, should physical gold be held by consumers at all?
I think, Karthik, very honestly, people will invest in physical gold in India. I mean,
Okay.
Indian consumers will always have some amount of gold in their investment portfolio. But the question is how much? At this point in time, my advice to investors would surely be to go ahead and increase by at least 10 to 15% their holdings in physical gold
Okay.
in the next 3 months. And I do not think that the currency wars have bottomed out. I
Okay.
think the chaos is going to continue. We might even see 89 or 90 mark being breached by the rupee dollar exchange rate.
All right. Let me bring in Kunal into this. Kunal, gold allocation should go up. Mithali is saying by about 10 to 15% as these higher rates. Do you agree with that? And then, if not sovereign gold bonds, should it be physical gold? Should it be ETFs? Or what other tools can, or should it be digital gold? What tools can investors apply right now?
So the second part of your question, I believe that ETFs are a good way to invest in. Sovereign gold bond doesn't exist. So one is gold ETFs have done well. The cost is very low as far as the AMC charges and everything is concerned. So I think that is a better choice. As far as from here, where are we heading? And I also firmly believe that we are in a structural bull market. The reason for that is gold is no longer just a asset class; it's a strategic investment for central bankers, for investors. Because so this year itself, U.S. debt 9 trillion worth of U.S. debt is going to expire this year. So they have to repay that. So how they are going to do it? There are a lot of uncertainty. What if inflation shoots up? What if China comes with a stimulus package? What if trade war worsens between US and China?
Right.
So all this question doesn't have any easy answers. And hence, we believe that the gold will continue to be a strategic investment and do very well going forward. So I am pretty upbeat about the outlook, and I will not mind even if investing at these levels. It can go down a bit due to any reasons. Volatility will persist, but the trend seems to be still on the upside.
Okay, trend seems to be on the upside. Great. Kunal Shah continues to be bullish on gold, and Mithali Nikore is saying that maybe increase gold holdings by 10 to 15%.